Welcome to the deep dive. If you're looking to cut through that, well, overwhelming avalanche of global news and get straight to what truly matters, you're definitely in the right place.
Yeah, it's a lot to keep up with.
It really is. We know those headlines just flash by, but today we're aiming to some clarity to the chaos. Our mission, it's always to take a stack of recent reports, and for this deep dive, we've got some crucial global highlights from Reuters and really pull out the most important nuggets of knowledge.
Going beyond just the headlines.
Exactly. Understanding the true impact, the hidden connections, and, well, what it all means for you. As we look through today's reports, it became really clear we're in quite a remarkable period. You've got these rapid economic shifts, complex geopolitical moves.
And domestic policy changes, too, all converging.
Right, all at once. It's definitely a lot to grasp, and that's exactly why we're here. I'm joined, as always, by our expert who's been deep in these reports, ready to help us, make sense of this intricate web and connect those crucial dots. So let's jump right in. Okay, let's unpack this. It's undoubtedly one of the biggest stories right now. Trump's new tariffs. This feels like a pretty significant escalation, doesn't it?
Oh, absolutely. It's a major step.
What are the immediate details we need to grasp? These new protectionist moves, they're widespread.
They are. We're seeing the Trump administration imposing new import tariffs on roughly 25 countries. And these aren't small adjustments. The rates are quite high. You've got Switzerland facing, 39%, India 25%, Canada 15%, Brazil 20%.
Right.
Really steep.
And these aren't just symbolic, are they? We're talking major industries, cars, steel, electronics, pharma, agriculture.
Exactly. You add it all up. And it impacts something like $500 billion in global trade flows. It's huge.
500 billion. So the big question I think everyone's asking is, why now? It feels like a shift, especially from the previous focus mainly on China.
That's the key question, isn't it?
What's driving this? Targeting so many different countries all at once.
Well, the sources point pretty strongly towards the approaching election cycle. That message of job and industry protection really resonates with his base. But what's really insightful, I think, is the diversification of targets. It suggests maybe a broader strategy, something beyond just the pressure on China.
So maybe a kind of global recalibration of trade alliances.
It could be. It's certainly signaling something more widespread than just one bilateral dispute.
That's a really crucial observation. It feels less surgical, more like a broad signal. So how are other countries reacting? What are the immediate consequences we're seeing?
Well, the reaction's been immediate and pretty widespread, as you'd expect. The World Trade Organization, the WTO, and the EU, they've already signaled possible retaliation.
Retaliation. Okay, so this could escalate quickly then.
It absolutely could. You could see a trade war sparking on multiple fronts, and we're already seeing tangible shifts on the ground. Asian importers, for example, are actively looking for alternative suppliers to dodge these tariffs. And there's been a noticeable rise in boycott calls against American brands on social media in some of these affected countries.
Boycotts. And what about closer to home for people in the U.S.?
Well, for consumers, it likely means rising prices on imported goods. Simple as that. For American exporters, though, it's new pressure. It raises the risk of unemployment in those sectors. And maybe most critically, some U.S. companies are already talking about revising their Asian supply chains. That's not just a quick fix. It signals a potentially deeper, longer-term shift in how global manufacturing is structured.
A longer-term shift.
Okay.
And as if the tariff news wasn't enough, the markets reacted almost immediately, didn't they? It seemed tied into some really weak U.S. jobs data, too.
Absolutely. It was almost a perfect storm for the markets. The timing was incredible.
That July employment data, only 108,000 new jobs. That was way below expectations, right?
Yeah.
Like half.
Almost half, yeah. The expectation was around 210,000. And unemployment actually ticked up unexpectedly, that kind of miss. It always sends tremors through the markets.
And tremors it definitely sent. The stock market reaction was swift. And pretty dramatic. The S&P 500 fell about 4% intraday.
Roughly 4%, yes. And the NASDAQ, which is heavy on tech stocks, dropped nearly 6%, a really sharp sell-off.
And it wasn't just the U.S., right? This spread globally.
Oh, yeah. Asian markets closed sharply lower, too. We saw the U.S. dollar weaken rapidly against other major currencies. And high volatility in things like gold and bond yields, it was just one of those days where everything seemed connected.
So what's really fascinating here, how do these things, the tariffs, the jobs report, the market plunge, how do they combine to create such a shock?
Well, that's the insight, isn't it? They aren't just coincidental events happening at the same time. They feed off each other. They reinforce this deeper kind of underlying economic anxiety. It suggests maybe a growing fragility in the system where policy shifts or even single data points can trigger these really big market reactions.
Fragility. That's interesting. And what does this mean for, say, the Federal Reserve? Are they expected to react?
Definitely. Investors are now widely expecting the Fed to cut interest rates maybe as early as September. And you see U.S. Treasury yields falling down about 0.3%. Suddenly, that word recession, well, it's back in the headlines again.
So for you, the listener, this isn't just about abstract numbers on a screen. It signals maybe an era where economic certainty is, well, eroding.
Precisely. It demands a new level of maybe financial awareness or preparedness from big companies right down to individual households.
Okay, let's pivot slightly. This focus on national interest, it's not just economic, is it? It's playing out very visibly on the global chessboard, too. Maybe one of the most striking examples is this nuclear submarine maneuver. This came right after those remarks from Russia's Dmitry Medvedev about military options on the table.
That's right. The context was Medvedev saying military options were possible if the U.S. corners Russia.
And the response? The Trump administration ordered 2 nuclear submarines deployed. Where exactly?
Yes, deployed to strategic locations, one in the North Atlantic, the other in the Indian Ocean.
So what's the strategic message there? What's the intent?
It seems pretty clear. The U.S. aiming to send a strong deterrent signal both to NATO allies and, of course, to Russia, demonstrating readiness for a potential military crisis, showing teeth, essentially.
And how did that play out? Did it calm things down or stir the pot?
Well, it's complex. While the U.S. was projecting strength, key NATO allies, the UK, Germany, France, they actually called for restraint.
Restraint. So maybe some nervousness among allies about escalation.
That seems likely. A level of caution, perhaps, and Russia. Predictably, they labeled the move provocative.
So it becomes this sort of high-stakes signaling game, everyone watching each other's moves?
Exactly. A classic geopolitical chess match with everyone trying to read the intentions behind the actions.
Okay, shifting gears, but still on global strategy, there's this really interesting development, a trade deal with Pakistan. Pakistan gets tariff reductions from the U.S.
Yes, significant tariff reductions on its exports.
But this feels like more than just a standard trade deal, doesn't it? In return, U.S. companies are investing more in Pakistan.
That's right. Accelerating investments in sectors like energy, mining, IT, even crypto and textiles.
So what's the bigger picture here from the U.S. side? What's the political driver?
Well, you're right. It seems to be part of that larger strategy we talked about, diversification, moving away from such heavy reliance on, say, China and India for certain supply chains, and strengthening ties with alternative suppliers. It's a proactive move to kind of rebalance those global economic partnerships.
Rebalancing. And what's the immediate impact been for Pakistan? Have we seen effects?
We have, yeah. The economic outcomes seem pretty swift and positive so far. The Pakistani rupee, their currency, has appreciated. The Karachi Stock Exchange rallied. And we're hearing about renewed interest from U.S. investment funds looking at Pakistan. So it suggests it's a potentially significant boost for their economy.
So if we connect this to the bigger picture, this deal highlights that broader global realignment, moving beyond the old power blocks.
I think it does. It's about building resilience, maybe, in an increasingly uncertain world, not putting all your economic eggs in one or two baskets. It's actively seeking new alliances.
Right. Now, contrast that success with reports that U.S.-India trade negotiations have stalled. U.S. officials are saying an agreement is unlikely short-term. Why? What are the sticking points?
The reports point to a couple of key things. India's continued role in BRICS, that's the bloc with Brazil, Russia, China, South Africa, and also its continued purchase of cheap Russian oil.
Okay, so it's a tricky situation. The U.S. strategically wants to support India as a counterweight to China.
That's a big strategic goal, yes.
But India seems reluctant to maybe compromise its own independent path, particularly on things like BRICS and Russian oil.
Exactly that. India is clearly prioritizing its strategic independence here. They're pursuing their own interests, even if it causes some friction with potential partners like the U.S.
It really highlights that growing multipolar world, doesn't it, where alliances aren't as fixed as they once were.
Very much so. Nations are reevaluating relationships constantly.
And speaking of friction, let's touch on the recent tensions with Canada, our neighbor. It flared up quickly, didn't it? What happened there?
It did happen fast. Essentially, the Canadian Prime Minister expressed support for Palestine. And then shortly after, the Trump administration raised tariffs on some Canadian goods.
And Canada's response?
Immediate and firm. They announced a suspension of high-level talks with the U.S.
Wow, suspending talks. That seems significant, especially given the massive trade volume between the U.S. and Canada. Was it $700 billion a year?
Around that, yeah. It's huge, which is why these tensions matter so much. They directly affect both economies, businesses, jobs, consumers. Very tangible impacts.
And the political dimension. How's it playing out in each country?
Well, in Canada, the opposition is calling for a firm stance against the U.S., so domestic pressure there. In the U.S., meanwhile, Trump's move seems to have played well with his base, suggesting it might have been, partly at least, a calculated political move.
So this just underscores how interconnected everything is, doesn't it? Politics, trade, diplomacy, even with your closest allies.
Absolutely, and how quickly things can change. Political actions ripple through trade relationships almost instantly. The consequences can be quite far-reaching, even from what seem like isolated statements or actions.
Okay, let's bring this deep dive back home, a bit more directly to the U.S., though it still has global echoes. Let's talk about the pressure on drug prices. This hits home for millions of people. The Trump administration sent formal letters to CEOs of, 17 major global pharma companies?
That's right, 17 big players.
Demanding U.S. drug prices be cut to the average seen in other developed OECD countries. Because, let's face it, the U.S. has paid the highest prices for a long time.
For a very long time, yes. It's a long-standing issue.
So what's the plan here? How are they trying to enforce this? Is there a deadline?
The approach is quite direct, even aggressive. These companies have until September 29th to give written commitments for price cuts.
And if they don't, what's the stick?
The threat is product restrictions in U.S. public insurance systems, like Medicare or Medicaid, presumably. That's significant leverage.
Huge leverage. Have we seen any impact yet? Are companies reacting?
We have seen some immediate impact, yes. Some temporary price reductions announced in the U.S. market already. And interestingly, the stock prices of major European and Japanese pharma firms dipped on the news.
So investors are taking this threat seriously. This feels like a really direct intervention in a major market.
It really is. What's fascinating here is just how direct and assertive the approach is, taking on a whole global industry like this.
It certainly intensifies that whole debate around price reform in U.S. healthcare, doesn't it?
Absolutely. But it also raises that bigger question. Could this set a precedent? Could we see similar pressure tactics used in other sectors down the road, maybe tech, maybe energy, where prices are seen as too high?
That's a really crucial point. It signals a potential shift in how government might try to influence market pricing directly.
A willingness to use executive power in a very pointed way. It could definitely set a precedent.
And that really brings us full circle, doesn't it? Connecting these big global shifts back to the listener. What does all this mean for you? Well, it means these large-scale policy changes, tariffs, trade deals, geopolitics, even drug price negotiations. They aren't just abstract news items. They can, and often do, directly hit your wallet, affect your access to goods, and shape the stability of the world around you. So, wow, we've covered a lot of ground in this deep dive today.
We certainly have.
From those dramatic tariff announcements and the market plunges that followed, then navigating the intricate dance of nuclear subs and shifting alliances.
Like that Pakistan deal, the stalled India talks, even the friction with Canada.
Exactly. And wrapping up with that very direct impact on healthcare costs through the pressure on drug prices.
And that really is the core message of the deep dive, isn't it? Knowledge isn't just about knowing facts. It's about understanding how they connect and what they mean. All these events, they might seem separate when you just glance at headlines, but they're deeply interconnected. They weave together to form this complex, constantly changing global picture. Understanding one piece often sheds light on another.
Absolutely. It's all part of the same fabric. So as you go about your day, here's maybe a final thought to chew on, something to consider beyond our discussion. What might be the long-term, maybe unintended consequences of these rapid-fire, often protectionist, and quite assertive national strategies we're seeing?
That's a big question.
It is. How might these short-term fixes or these power plays end up reshaping global cooperation, global stability for the long haul? And how might that, in turn, affect the world for generations to come? Definitely something worth pondering. Thank you so much for joining us on this deep dive today. Keep exploring, keep asking questions, and stay well informed.
We'll be here for the next one.
We will. See you next time on The Deep Dive.